You can yell and scream all you want about how much energy is being consumed, but when you compare it to the legacy system, it's actually much, much more efficient. You're just not going to stop the adoption of this asset, and it will become kind of that global store of value.
Hello, and welcome back to the CoinStories podcast. I'm your host, Natalie Brunell, and we are talking to some of the leading voices in Bitcoin, their backstories, how they were first introduced to Bitcoin, and their take on what the cryptocurrency offers. I'm so excited to share my guest for this episode is the incomparable Anthony Pompliano, also known as Pomp on his popular social pages. Anthony is an entrepreneur, investor, and U.S. Army veteran. In addition to being one of the most vocal and viral advocates of Bitcoin, he manages a portfolio valued at more than $500 million in early-stage tech companies, has a daily financial newsletter, and hosts the Pomp podcast. He sees Bitcoin as the apex predator in the financial markets. And he also happens to be the guy that's selling Bitcoin pizza. Here's Pomp. I want to take it back to the very beginning first. So I know you grew up in Florida. You're one of five, right? Growing up, you have a lot of siblings, and then you guys moved to North Carolina. So can you kind of talk a little bit about just what your upbringing was like and sort of maybe even the socioeconomic background of your family, if you can?
Yeah, so I don't remember anything pretty much from Florida. I don't remember exactly when we moved, but I was like 6, 7, 8 years old, whatever it was, and so very few memories from there. Grew up in really North Carolina, and was fortunate that my mother stayed home with us. My father traveled a lot growing up, so basically he was gone Monday through Friday, and so basically it was me, my 4 brothers, and my mom. And it was, mass chaos, as you can imagine, a family with 4 boys. But she did everything that she needed to get us places. And I literally remember, we'd be playing like baseball, and because each one of us is about 2 years apart, maybe 2 of us could play on the same team, but then everyone else would be on different teams. And so she would be driving around from ballpark to ballpark, and you'd see her kind of park. She'd watch a little bit. She'd go pick up another brother or whatever. And so that was pretty much, life outside of school for most of my childhood.
And your dad was an entrepreneur as well?
So my dad spent like 25, 27 years pretty much working at the large telecoms to start off with. So I think he spent 20 something years at MCI, and then eventually went to AT&T, and then started to either serve in like a executive role, so stepped in as a CEO of a company that was venture backed, or started his own businesses after that.
And so I know that you talked about this with Raul, but seeing him and the line of work that he did that sort of inspire an entrepreneurial spirit in you, sort of thinking that, you might want to go into business someday? Or at that point, did you even know what you wanted to do when you grew up?
I had no clue what I wanted to do. I kind of as a kid went through everything, right? Hey, can I go play in the NBA? No, probably that's not going to happen. Okay, I'll go play in the NFL. That's not going to happen. All right, maybe I should be a lawyer, like arguing with my brothers, right? All the way down the line. But I think we're ultimately what we were doing is we were getting a first class education in 2 things. One was business in general, just kind of around the house. My dad was very entrepreneurial, so was my mother. But also on top of that, my parents both made a pretty, I don't know if it was intentional or not, but important decision early on, which was, all of our friends had allowances and kind of all these little things. And my parents just said, look, we're not going to do any of that. Right. And I can remember whether it was myself or my brothers, if we wanted money for something, hey, I want to go to the movies, I want to go do this, I want to go do that, whatever. There was usually some component of, okay, if you want money, you have to go do it, go rake the leaves, go mow the lawn, do something like that. And so it was less about kind of you get paid to do chores. It was like, no, you have to do these chores, but it was teaching this idea of if you do work, then you can earn a living, right? And so $20 to go to the movies isn't necessarily a living, but it was just instilling in that whole idea of kind of working for money. And so I think that my brothers and I, from a very early age, were very entrepreneurial. I can remember it would snow, and we'd basically race around and try to convince all the neighbors to give us the exclusive on, shoveling their driveway. And then we got smart. We said, well, why do we have to shovel the whole driveway? What if we just shovel the tracks for the car to get out? So it saves us time. We go do another one, and all kinds of different things like that. It was always somebody had a scheme somewhere to have a little money in their pocket. And I think that just as you get older, those schemes become, kind of more legitimate businesses on a larger scale, more technology enabled. And so it's just a great kind of, learning ground, if you will, for a lot of what I ended up doing later on.
No, that's really interesting. It's like they instilled that hustle momentum in you early. So I know you went to Bucknell and you studied economics and sociology, and then you went into the military for a while. So I know that there's so many stories you can tell. I know you were deployed, but first of all, why did you want to study economics? What sparked that? And maybe how did your military service, if you can kind of give sort of a summary of that, how did that impact what you wanted to do as well?
Economics was real easy. It only meant you had to take 8 courses and money was involved. And so there wasn't much thought further than that. If I understood what an economics degree was at the time and how little you would actually end up using that, I probably wouldn't have done it.
Oh, wow.
But that was pretty much it, right? It was just, I was playing football and talked to a couple of older guys on the team and they were like, look, man, you got to take Intro to Bible. That's a layup course, and go in there. And I remember the first day I got into the course, literally there was like 18 of the 35 students were football players. So I was like, okay, this feels like a good place to be. And then from there, it's just, okay, what other classes should I take? And they basically said, look, something like an economics course doesn't require a lot of credits. You can get it done. You probably enjoy it. And it's not necessarily overly taxing compared to like, let's say the engineering school or something like that. So ended up doing that. And then out of personal just interest, took a lot of like sociology classes. So things around like criminology and things that I just find, interesting. And so that was kind of the thought process there. Had no clue what I would do kind of after school. And I'd already joined the military before I went to college. I'd basically done a reserve type contract. And so I got deployed during my junior year of college. I literally got pulled out of school, missed 3 semesters for deployment to Iraq and came back. And when I came back, it was more of oh, I probably should like pay attention to this. There's like a world outside of school after this. And so that's when I really got kind of serious about, making sure I was learning, making sure I understood kind of what all the options were and kind of what I wanted to do actually from a career or profession standpoint.
And when you graduated, I know you started your own businesses and they had to do with, online marketing and advertising, but that's really not what you studied. So how did you learn that space? And at the time, did Bitcoin even exist?
Yeah, so Bitcoin existed. I didn't know about it, but Bitcoin existed. I was supposed to graduate in 2010 from school, but ended up graduating kind of December of 11, I guess. And so the whole idea really was simple. It was like, look, my father had a call with me, and when I was coming back from Iraq, I literally was like, I'm going to go right back, right? Like basically all these private contractors are getting paid hundreds of thousands of dollars to go do what I just did. It's safer, it's easier. You don't have a somebody over top of you. You don't have to wear a uniform. Like, this is like cake. And then most of it is tax free. Like, why would I not go do that? And he was like, because that is not sustainable. And, basically you don't want to be like a gun runner the rest of your life. And so he was like, look, you should go back to school. You should finish. And then as I was finishing up, he said, you have 2 options. You can either go get a job or you can create a job, but you got to do one of the 2 things, right? Because this thing's going to end soon. And so getting a job just sounded antiquated and frankly stupid and uninspiring. But the whole idea of creating a job was interesting to me. And I just said, what does that mean? He's like, we can start a company, right? And so I started to just kind of look around and try to figure out, what are the problems that I see and kind of how can I solve them? And I did that with a couple of friends from high school. We knew nothing, literally, and made every mistake in the book. But it was fun. It was a great education. And then kind of was off to the races from there.
So after you started your own companies, did you feel like you were starting to really make a living for yourself? Because I know eventually you segued back into kind of corporate America with the massive social media giants, the Facebooks, the Snapchats. So how did that transition happen? And how did you start to, well, I guess I'll get to the investing question, but how did that transition happen?
Yeah, so I felt like I was basically doing just well enough, I think was kind of the best way to put it. But at the same time, the money has never been a big driver for me in terms of like, hey, how much money do I have? To me, it's more of like a scoreboard. And sure, it's great to kind of frankly, banter with people about which investment did best, who built a bigger company, all that kind of stuff. But at the end of the day, like it just really never was the thing that I was like, oh my God, like what am I going to do if I have no money, right? It was always like, I'll figure it out. And so to me, it was always about the learning, right? Like I don't understand how to do this. And I would kind of start these companies and they would grow to a certain size and I would kind of like hit a plateau and kind of peter out. And so I couldn't hit kind of that scaling phase. I didn't know how to do it. I didn't have anyone around me who had done it to a great degree. And so after kind of the second company, I was able to sell that business. I got a phone call from somebody at Facebook and they were like, look, what are you going to do next? And I was like, I have no clue. I'm like, well, what if you come work here? And I literally didn't even register to me that like Facebook would have a big office. People would work there. And like, it's just, I was a young kid who frankly was pretty naive to the world. And so they flew me out. It was the first time that I'd ever been to San Francisco, not as like a little kid, and went to the campus and just said the energy, the intelligence of the people here, kind of the momentum and growth, like I just need to be here. And so pretty much said, I'll take the job, and started, I think, like 2 weeks later, and had a blast doing it.
And you didn't know the person who contacted you from Facebook? It was like a cold call? How did they find you?
It was a recruiter on LinkedIn who literally was trolling around trying to find candidates, and
Wow.
Did a fantastic job for me because he found me and helped me get in there, which was pretty good.
Wow. Okay. So at what point did you actually learn about Bitcoin? Because now we're a couple years out of school, right? And you're working for these big companies, and eventually you became an investor. What caused you to learn about Bitcoin?
2014, I was working at Facebook, got a team that I'm working with, and we hired David Marcus on another team. He was the president of PayPal. He was talking about Bitcoin a bunch, and really about kind of remittance payments and incorporating that into a Messenger or some other aspect of the product. And I overheard a conversation and literally turned to an engineer and just like, what is this? And they were, I'll never forget, I said, it's stupid. Okay. And just kind of kept moving on, never Googled it, didn't do anything. But that was kind of the very first time. So from a lot of accounts, like hearing about it for the first time in 2014, for most of kind of the like OG Bitcoiners, they had already heard about it, done the research, and were already kind of playing in the space. So I was relatively late to even kind of learning about it. And then even stupid, in the sense of like not going and doing the research and really doing anything. So if you fast forward to 2016, now I'm investing full time. And somebody pitched me on mining facilities, and that really resonated. My father at a lot of those telecom companies, and afterwards had worked in the data center space. So, was relatively familiar with kind of how that business works, and mining is essentially the same thing. And so I just said, look, this is, a data center on steroids. I understand this business. And I basically took the Facebook stock that I had earned. I sold it. I took 50% of it. I put it in my bank account, and I said, this is what I'm going to live on. And I took 50% of it, and I said, I'm going to go buy some mining machines. And that was kind of really kicked me off down the rabbit hole. Fast forward a couple of years, and here we are.
Just a quick question out of curiosity. I think the word angel investor is so attractive, especially to young people. They think, oh my gosh, an angel investor, that's so cool. You have so much money. How do you invest in these companies? So just out of curiosity, I mean, do you just, when you work for companies like Facebook and Snapchats, do you just get to a point where you have enough money that you can now invest, or are you working with other companies that are essentially putting up money because they have a ton of capital? Like, how does someone become, sorry if this is naive, but how does someone become an angel investor?
Yeah, there's a couple of different ways you can do it, right? So you could be an operator and basically build a company and earn a living and quite a bit of wealth, and then you can invest your own capital. You can basically do something like a scout program where you're investing the capital, but the capital was raised by somebody else, and you get some percentage of profits if there are any. On top of that, you can also raise your own fund. So rather than kind of be a scout for somebody else, you're the actual investor of your own fund, but you've got to go out and do the work of the fundraising. Or you can do what I did, which frankly was I would go find the deals, and then I would go to investors and say, hey, like I found this great deal, I want to invest. If you give me $100,000, I'm going to put this $100,000 in this specific deal. And then, oh, by the way, I'm going to also put it through a fund where there's 6 other deals I've already done, and you'll get access to any other future deals I do as well in this fund. And so it was almost a way to like use a carrot to get people to invest in a fund, and then they would get exposure to that deal plus deals that had already done. And so rather than it be kind of a blind pool where they're giving you money and they don't know what deals are in the actual vehicle, they essentially are able to kind of look before they actually invest, which was somewhat of a unique strategy. And that's really how I got started. The first fund was small in venture capital terms, it was a $3.5 million fund. But from there, then just kind of worked my way up to larger and larger funds.
Wow, that's amazing. I mean, it just shows how scrappy you have to be in that world. That's awesome. Okay, so now you're in the mining space within Bitcoin. You're mining it yourself?
So started out initially, basically, I bought some machines. I used a third-party hosting company, and they were doing it. I had a wallet, and I would just see. It was actually Ether that we were mining. Ether would just get deposited into the wallet, and it was like a cash flow business. And then all of a sudden in the beginning of 2017, we saw Ether go from like $10 to 30 to $100. And that happened in like 60 or 90 days, kind of in the spring of 2017. And I remember just being like, what is this thing? And so then I really, really started to spend a bunch of time like understanding it and Bitcoin, et cetera. And then from there, I ended up building a much larger facility with a friend of mine, Jason Williams. He and I had both invested in a business, and he had made a very large investment. Mine was quite small, but he ended up stepping in as CEO of that business. It was a power generation company. And so that power generation company called PRTI essentially took car tires, turned them into oil, steel, syngas, and carbon. They sold the oil and the steel as kind of commodities, and they took the syngas and carbon and would turn that into power, sell it into the grid. And basically we had the idea, well, rather than sell the power into the grid, why don't we just build a mining facility right here? And so we went down this long, crazy journey of building a mining facility right there on site, and a kind of vertically integrated, kind of off-grid power generation site. And that was, I think, a crash course. Like, you see right from the ground level, like how it or the blockchain actually validated what goes into the mining process. And it was a great education for me, but also great for that business in terms of building out that revenue source.
What made you believe in Bitcoin? I mean, how do you go from sitting next to someone who tells you it's stupid to now basically investing all your time in mining it?
Yeah. Look, I don't know, right? It is kind of the short answer. With that said, I think that I've probably got a pretty good understanding of technology trends. I've got a pretty good understanding of kind of the internet. And some of it's just intuition, right? You just start to kind of see, okay, well, what's going on right now? Kind of how does the old world exist? And like, what's the probability? I think a lot of people make these like binary decisions, like, will this work? Will this not work? To me, it's more a probabilistic idea, right? Of, hey, is it greater or less than 50% chance this works, or 20% chance that this works? And so, across a number of different trends, I've been able to kind of triangulate and say, yeah, this has a higher percent chance of working than most people are giving it credit for. And what I've done throughout my entire investing career is I'm looking for asymmetry. I want to find things that have 1,000x type upside, but a 1x downside. And so that's ultimately what venture capital investing is all about. And Bitcoin to me was, a 1 to 5% chance or probability of success type investment opportunity. But if it worked, it would end up being, thousands of percent of upside and only 100% downside. And so to me, it was just like a no-brainer, right? Why would you not start to look at this and spend time on it? And then as you do that, you just learn more and more about it, and you just become convinced, right? It's like, look, every single currency in the world is going to be digital. The world's going to run on these open, decentralized protocols, and the legacy system is going to get disrupted in a major way. The players who understand that are going to embrace this new stuff, and they'll survive. And the players who don't will end up getting disrupted. And so when you just kind of zoom out for a second, you're just like, it's kind of like electric vehicles. Like, are there going to be more electric vehicles or less electric vehicles in the future? Probably going to be more. Mm-hmm. Sure. Is it going to be Tesla? Is it going to be some other company? Like, that's all up for debate. But like, electric vehicles as a trend is only headed in one direction. Same thing with digital currencies, right? It's like, look, are there going to be digital currencies in the future or not? Right? There aren't any today in any major way at the kind of nation state level. Will there be in the future? Yes. Okay. Well, then let's go figure out kind of which ones are the ones to bet on there. And I think that's, I just look at it from a trend perspective more than anything.
At what point did you start your crypto hedge fund company? How did you do that, and what was the reason behind it?
Yeah, so throughout 2017, Jason and I had done a bunch of investing. Most of it in kind of the crypto world was done personally, so not through this fund. And we just kept watching it. And, as with many things, like when the price goes up a lot, you just pay more attention to it. Right. And so we were just like, what is this stuff? And as we got more educated, we realized like, hey, we should go focus on this specific space. There wasn't a lot of kind of professional investors yet focused on it, but there was lots and lots of smart founders, developers, et cetera, going to build stuff in the space. And we were pretty, I think, self-aware in that we knew that we couldn't raise capital by ourselves. We didn't have institutional relationships. We didn't have experience managing institutional capital. And so we went out and we basically did a partnership with Morgan Creek Capital, which is run by a guy, Mark Yusko, used to be the CIO at the UNC Endowment. And we said, look, we think we understand this space. We think we understand early stage direct investing. You've got all these institutional relationships. You've been managing money for a long time at kind of, billions of dollars. And so like, if we partner up, we think we can be successful here. And we ended up raising over $100 million, deployed it across a bunch of different companies that people probably heard of. And so far has turned out pretty well.
So you're one of the big Twitter people in terms of the Bitcoin space. One of the original memers, pioneers, whatever word you want to use. But at what point did that start? Like, did you want to be someone who on social media is kind of promoting Bitcoin? And how did you build that following? What was the intention behind it?
If you call me a meme lord, that'll be perfectly fine with me. So I'll take that nomenclature any day of the week. No, listen, I think that I had no intention of even tweeting about Bitcoin, really, right? Frankly, it was one of these things where I tweet about the things that I'm spending time thinking about and focused on. And what I ended up finding was I was spending more and more time talking about Bitcoin because I was thinking about Bitcoin more. And so one of the advantages that I've had is I've worked at both Facebook and Snapchat and understand, so how the algorithms work, how the tech companies think about distribution and all that kind of stuff. But also on top of that, I'm digitally native. Like I grew up with a cell phone in my hand for the most part, right? And there's people who are a little bit older than me who they may not have gotten a cell phone until they were out of college, right? Whereas for me, most people my age got a cell phone when they were in high school, and then obviously kids younger than me, they got a cell phone, when they were fourth grade or whatever. And so just being around the technology, you understand how it works a little bit better. And then I think the last part is I'd gone to war, right? I literally did not care what people thought about me. I did not care in terms of kind of playing by the rules that everyone else is playing by. It was just, I'm going to be myself. We all die, and I'm going to enjoy it while I'm here. And so
Wow.
I think it was that like authenticity and kind of transparency that people really gravitated towards, because they were like, in many cases saying, look, he's saying the things that I'm thinking, but I won't say myself. And so
Totally.
naturally that just built a following over time.
I mean, do you think that the Twitter aspect, some of the people like you are impacting the price at all and the awareness?
I don't know necessarily if like the tweets and the content directly impact price. Like that seems like a little bit of a stretch. What's probably more likely is that a lot of the content that's being produced ends up being the type of content that convinces large players to come into the space. So a lot of multi-billion-dollar hedge funds that the people who are making the decisions there, I know they listen to the podcast. I know they read the email. Michael Saylor, when he decided that he was going to go ahead and do this, he was very explicit. He named 10 or 12 people. He said, look, I've consumed all this content. Like they were really helpful to me. And so I think that's probably more of where you're seeing an impact is the content's educating people. Then those people, once they're educated, are making informed decisions. And those decisions lead to investments, and those investments lead to price increase. So it's kind of an indirect type impact, but definitely not, you, I, or anybody else goes and tweets about Bitcoin and all of a sudden the price goes up.
Yeah. Some of my favorite pieces of content that you make just really hit on what we're seeing in terms of our economy today, the government printing all this money, and just touching on the idea that, we might be experiencing inflation that we haven't seen in decades, that people who, except for people who are over 50, haven't experienced in our country. So can you talk a little bit about that, like where we're at now, and maybe do you think that environment is helping Bitcoin's momentum right now?
Yeah, I mean, it's absolutely helping, right? Basically, what you've seen is central banks around the world run a multi-trillion-dollar marketing campaign for why Bitcoin's important. On top of that, what you've seen is you basically saw them send everyone home and say, hey, don't go to work. And so naturally, people are playing around on the internet. Consumption of content goes through the roof. And so what's the content that's cutting through? It's the content that's speaking directly to people. And so whether it's certain types of stocks or it's Bitcoin or whatever, people are just realizing like the entire Wall Street charade is not have their best interests at heart, right? And so they're saying, I have to go educate myself. And what they're finding in that education process scares the hell out of them. When they start to realize that the bottom 45% of Americans are getting punished by all this monetary stimulus because they hold no investable assets, all of a sudden they say, well, I got to hold assets. What should I hold? Well, let me go look for store of value type assets. And Bitcoin is kind of the winner in that space. And then even the people who do have some investable assets are starting to realize, wait a second, that 60-40 global portfolio that some guy in a suit and cologne told me as my financial advisor I should hold, maybe that's actually not the best way to manage my capital moving forward in a zero interest rate type environment. And so I think you're just naturally seeing people adapt to a changing environment. They're educating themselves, and they're starting to understand that they have to be responsible for themselves. And I just keep hammering it home, like, just think for yourself. Like, and the only way to think for yourself is you got to educate yourself. And if you educate yourself, then you ultimately have the power. You have the ability to make these decisions. decisions, that financial advisor is no smarter than you. It's just that they spent the time to actually get educated on a certain topic. And so what you end up seeing is they're telling you things to do, but they're not doing those things themselves. And so what you need to do is you need to educate yourself so you can make decisions, because ultimately no one's coming to save you. The government stimulus check isn't coming to save you. The financial advisor is not coming to save you. It's on you. And so naturally, those types of ethos, those types of approach to life, people tend to align with this kind of idea of self-sovereignty, right? Which Bitcoin obviously embodies. And so I think that's kind of just the overlay of, as more and more people educate themselves and take responsibility, naturally they gravitate to something like Bitcoin because of the ethos of the asset itself.
Well, that's interesting because I think when you do educate yourself on the technology under Bitcoin, or when you read a book like The Bitcoin Standard and maybe learn a little bit about Austrian economics, the argument is very convincing for Bitcoin. So why do you think more institutions haven't adopted it yet? Why aren't there more Michael Saylors? Why haven't the Facebooks or the Apples gone into it yet?
I think they're trying to figure out when and how they do it. I think that they're all going to do it. They're definitely talking about it right now. The biggest thing probably is just everyone's scared, right? And they're not scared of Bitcoin. They're scared of the career risk. And so whether you're a public pension fund, whether you're a large corporation, or whether you're an insurance company or a central bank, like if you're the first to do something, there's risk to that. And humans are just naturally fearful, risk averse type kind of creatures. And so when you start to think through like, why be the first, people just say, I'm not going to be the first. So take somebody that's courageous and has deep conviction, like a Michael Saylor. He goes and he sticks his flag in the ground. And what happens next? Then you see the next kind of most courageous people. And then eventually you're going to see more and more and more people do it until 20 years from now, you and I are going to do a podcast and you're going to be like, what happened? I'm like, well, everyone's got Bitcoin on their balance sheet, right? And so it took 20 years for that to happen, but like it's going to happen. And so I think the same thing is going to happen at the financial institutions, insurance companies, central banks, et cetera. It's just going to take time. And when it takes time, I think people just naturally want stuff to happen, this year or today. And it's hard to kind of have that long-term view. But over a lifetime, I think that we're all going to be drastically surprised to the upside in terms of just how disruptive this is. And kind of we'll look back and we'll laugh about all the people who said that there was no way in hell this was going to become the global reserve currency, because I think it's a foregone conclusion at this point.
Yeah, I think it's interesting too that more people need to understand that you don't have to have a whole Bitcoin, right? There's the denominations of Bitcoin. You can have some Satoshis. So for people that have no background in this, for maybe they're hearing it for the first time on the CNBCs, they're watching interviews with you, they hear about the Michael Saylor, investment. What do you want people to know who are maybe younger or maybe older and aren't, as great with technology? What should they know about Bitcoin and what should they do?
Yeah, especially for young people, I don't even talk about Bitcoin as much, right? Like, sure, go learn about Bitcoin. I think that everyone should have some exposure to it, but more importantly, it's just learn how investing works, right? And the number one thing is just we don't teach financial education in this country, and I think that it should be a national emergency. That we don't do that. And the reason is that we have a monetary policy that punishes those without investable assets. And so if you're a young person today who, let's say you have $500, $1,000 in savings and it's sitting all in the bank, your money is actually being devalued. And so naturally, you're going to have a very, very hard time building wealth by just taking your salary. What you need to do is you need to be able to take a salary, spend less than you make, get out of debt, invest after you've built a rainy day fund. So put 3 months of cash aside and then invest every dollar you possibly can, and stop spending money on dumb stuff and just go invest. And what you're going to find is that your money will grow for you, right? You can put your money to work. And when you start to understand how leverage works in terms of using capital to build wealth rather than your time, you start to really focus on like, well, how do I get more capital so I can invest more and more of it? And I think that ultimately, like, that's the biggest thing here is just teaching people that investing is what will build wealth and not getting your salary. And most people have been told by their parents, save, right? And saving was actually a really great strategy for our parents and their parents' generation. For our generation, we live in a world where if you save, you lose. And so you have to be an investor. If you do not invest the capital, then you end up actually losing value over time. And literally, it's like putting a melting ice cube into your bank account. Of course, you're not going to do that. And so go learn how to invest. Start small, dollar cost average. Don't kind of do any crazy, really radical things. Just start. And once you start paying attention because your money's at risk. And once your money's at risk and you're paying attention, you'll learn. And once you learn, then you'll actually be good at it.
So you've referred to Bitcoin as the apex predator in the financial markets. And I know you tweet a lot about how you feel the stock market's just totally manipulated. Can you talk about what you mean by apex predator?
Yeah, it's really simple. If you denominate assets in Bitcoin rather than dollars, Bitcoin is eating them. And all of those assets are depreciating in value against Bitcoin. And so therefore, it makes it kind of the apex predator, right? It literally eats every single asset when you compare the two of them. And so I think that what makes that really interesting is historically the dollar has been the exact opposite. Right. If you were to take the U.S. stock market, for example, since 1971 and denominate it in dollars, it's up and to the right in a 45-degree angle and looks pretty healthy, right? Kind of that 7, 8, 10% kind of annualized return. If you take that same stock market and you denominate it in gold, it's actually down since 1971. And so what that tells us is it's less about the value accrual of the actual stocks, and it's much more about the asset in which it is denominated in. And so that's just pure devaluation of the dollar. And you see the same thing in real estate, stocks, et cetera. And so now all of a sudden, when you take those same assets and you denominate them in Bitcoin, and Bitcoin being kind of that reserve asset, all of those assets are actually down. And therefore, what Bitcoin eventually will do is it'll just steal market share back from a lot of these store value assets or investable assets and bring it back into the kind of reserve asset currency.
Well, and obviously the market cap's been growing. It hit 1 trillion only a couple months ago, but here you are predicting as much as 100 trillion market cap. I mean, why do you feel so confident that that could happen, and how do we get there?
Yeah, so I think there's two key pieces. So I said 100 trillion in a recent interview, and I think everyone kind of ran with it. It was more of just kind of back of the napkin math, right? So if you think of gold's market cap is 10 trillion, if Bitcoin is a 10 to 100x improvement on gold, then therefore 100 trillion would just simply be 10 times gold's market cap. Another way to think about this is if you start to really kind of do the math on, okay, well, if Bitcoin hits $1 million per coin, all of a sudden that's a $20 trillion market cap, right? If it hits 10 million, that's $200 trillion market cap. So again, I don't know necessarily if you can make a prediction, right? A prediction requires both the event and a timeline. So I'm not going that far, but just simply saying like, look, I do believe this will be $100 trillion market cap. And really there's kind of two things that feed into that. One is the 10x plus improvement on gold, but also two is as this asset continues to grow in value, exactly what we just talked about, where people are not going to get out of the currency and go into as many investable assets or store value assets. They can simply just save in that actual reserve currency or that reserve asset of Bitcoin. And so that will steal market share from other assets and it'll bring it back into Bitcoin, which eventually will help push it to the 100 trillion. Another really interesting point, I think, that people don't talk about as much is everyone thinks about the flippening between gold's market cap and Bitcoin's market cap being around that $10 trillion kind of milestone. But actually, I think that the flippening is going to happen somewhere sub $10 trillion $10 trillion in market cap. And the reason simply being that gold's market cap is going to contract at the same time that Bitcoin's market cap continues to grow. And so we've seen gold go down for the last 6, 7 months, 8 months. And I think that's only going to continue as the world wakes up to this brand new store value asset that digital natives are seeking.
Well, I know one of the things that you've touched on, which I find interesting, is that we really don't know how much supply of gold is out there. We can kind of guess, but we don't know. And it makes me think of the stock to flow chart that Plan B created. Do you believe in that chart? Do you feel like because there's such a finite supply, we can almost predict it?
Yeah, so stock to flow is used for some commodities. Gold's a great example. And basically what it tries to show is, look, here's the existing circulating supply of an asset, and then here is kind of that daily or weekly incoming supply. And so if we kind of plot those out and then we look at demand, we can predict where we think the price will go of this asset. And so what makes Bitcoin very kind of special for this type of analysis is that Bitcoin, we know with 100% certainty, not only what the circulating supply is, I can actually go to the blockchain and I can show you and prove to you what that circulating supply is. But I also know from a programmatic standpoint exactly how much Bitcoin is coming into the market today, tomorrow, and every single day in the future. And so what that does is it gives you 100% certainty of the supply side of a supply and demand equation. And so just naturally, you're going to be more accurate with that because I know with certainty about the supply of Bitcoin. I don't know with certainty the supply of, let's say, gold or other commodities. Then what it does is it just forces you to focus. Okay, let's just go ahead and forecast demand. And what we found is that you can simply take the increase in demand or the adoption curve that historically has happened and just extrapolate it out, right? Say, hey, look, it's going to continue to grow as it has for the last 10 years. And what does that look like? And so stock to flow tends to be a pretty kind of strong model to look at. Now, what's crazy is if you actually look at that model in comparison to where we are today, we've actually been operating a little bit further ahead, right? Adoption is happening a little bit faster. There's people coming with bigger dollars than we would have expected or that we've seen historically. And so I think that while it serves as kind of a good directional kind of milestone or something to look at. It doesn't necessarily mean that folks should use it for, kind of complete accuracy, but it does seem to be, pretty dead on, which is impressive.
Yeah, it's so interesting. And who the heck knows how many US dollars are out there in circulation, right? Just out of curiosity, I wanted you to touch on, I heard you say that in 2018, when the price of Bitcoin crashed, you bought up like a lot, you put a significant amount of your portfolio in it. So can you talk to me about like when you were investing, what the price was, and at what point you decided to go all in?
Yeah. So in December of 2018, when Bitcoin dropped, I basically was able to purchase a good amount of Bitcoin. I put 50% of my net worth into it at kind of the bottom of that 2018 bear market. And I'd been waiting for that since August of that year. I'd written something publicly saying that I thought that it was going to drop to around $3,000. And so was fortunate enough to kind of be ready for it. And then, pretty much just sat with that position for a while until April of 2020. And kind of April and into May, it just became very obvious that the Federal Reserve was going to continue to kind of manipulate the market. They were going to keep interest rates low for a while. There's going to be tons of quantitative easing in the trillions of dollars. And so I decided that Bitcoin was going to be the safe haven asset in the crisis, and pretty much went all in at that point. I don't know, 95, 96%, whatever it was of my net worth. And in hindsight, good decision. At the time, not exactly the most, easy decision to make because everything was just so uncertain. There's so much chaos, but glad I did it, obviously.
Yeah, I bet it was scary when it was like dropping that much and then you put so much into it. But well, for people out there that are wondering, should I get in? I'm hearing about these maximalists. I kind of believe the theory, but I'm only worth 50,000, 100,000, or I have a ton of student loan debt, or I have my mortgage on my house. Do you think it's a good idea for maybe like the average person to go all in, or just to dollar cost average and go in slowly?
Yeah, so I always say that the first thing is that the timeless finance principles always exist here, right? So just think about personal finance. One, you should spend less money than you make, right? Two is you should get out of debt. Three is you should get out of cash into investable assets. Four is that you should have multiple revenue streams. And five is just be patient and disciplined. That is the secret to building wealth. Now, within that, that bucket of get out of cash into investable assets, I think for the average person, 0% exposure is the wrong answer when it comes to Bitcoin, but also going all in or having some material kind of percentage is probably not also the smart decision. And really it's just because you've got to do the work, right? You really have to understand what you're buying, why you're buying it. What is your thesis? What is your risk profile? What are you doing to mitigate risk? And so for the average person, kind of moderation in all things is likely to be the thing that is best suited in terms of preventing any sort of catastrophic event. Now, there's this famous Warren Buffett quote where he says, diversification is basically for people who don't know what they're doing. Right. I think people look at that in a negative light, everyone should be concentrated. I actually look at it and say, look, the average person doesn't know what they're doing, right, from a finance standpoint. And that's because that's not their full-time focus. It's not their profession, right? They're going and they're a teacher, they're a fireman, they're an accountant, they're a mid-level manager, right? They just have a kind of full-time day job that we expect them to go do and do it at a high level. But then they also are learning about finance, they're learning about investing. And so take the time, study, learn, do what you have to do. Zero is the wrong answer. But for each individual person, what is that kind of ideal target is going to be different. And it's really dependent on what is your income, what are your expenses, what are your goals, what's your time horizon, all those things play into this. And so I think that, it's hard to kind of give blanket advice or blanket kind of opinion when literally every single person is so different in a different financial position.
There's so much doubt in Bitcoin, right? In terms of just mass adoption at this point, and people are worried that the government's going to ban it or they're going to overly tax it. I know that you've said some really interesting things about why you think that Bitcoin will ultimately survive. So I just wanted to ask you, what do you think is Bitcoin's biggest threat?
Self-induced wound. Basically, some kind of bug gets introduced into the code, I think is probably the thing that folks are talking about least. It's unlikely, very unlikely, right? The development process is very methodical, very intentional, and kind of done in a way to mitigate that and prevent any sort of bugs being introduced into the code. You've really got to kind of consider that there's always the possibility. Again, not probable, but there is a possibility that a bug could be introduced. And to me, that's much more of a threat than anything that anybody externally is going to be able to do. You can't shut down Bitcoin. If you ban it, adoption goes up. You can try to tax it. People will just hold it. Like there's all these things that you could potentially do, but there's pretty significant data points in the market that suggest you're just not going to stop the adoption of this asset, and it will become kind of that global store of value. And so really, it's kind of one of these things where the way to mess it up is we mess it up, right? Being the Bitcoin community or the Bitcoin development community. And so I think that it's something that most people can't do anything to mitigate themselves as a risk, but that is probably the thing that I think is most likely to be a mistake or an issue if so it happens.
And did you have any thoughts on the critics about the energy consumption? And as we scale up more and more, just the amount of electricity that's needed?
They're wrong. I mean, that's pretty much it. If you think about what most of these people are upset about, it's twofold. One is either the aggregate amount of energy that's being consumed for the Bitcoin network, or two is something around kind of clean or renewable energy. And I think that when you compare Bitcoin's kind of value or its economic production with its energy consumption, and then you put that next to something like the US dollar, Bitcoin is immensely more efficient than the US dollar system, especially when you layer in that economic production. And so I think that's kind of, negates the first argument is you can yell and scream all you want about how much energy is being consumed, but when you compare it to the legacy system, it's actually much, much more efficient on like a per dollar of economic output. The second thing is around cleaner renewable energy, and 75% of all miners use some form of cleaner renewable energy. And so when you look at that, I think people really have kind of latched on to these public narratives. It's easy to yell and scream about, oh, there's coal, there's this, there's that, whatever. Actually, I think it's the exact opposite. I think that Bitcoin is going to be the largest driver of R&D around clean and renewable energy, simply because there is so much value, right? There's $50 million a day being paid out to miners right now. And so you are heavily financially incentivized to go and find the cheapest power possible. The cheapest power is clean and renewable power. And so there's this global scavenger hunt, both from just can I find it or can I create it? And I think that you're starting to see that with things like gas flare capture, companies like Great American Mining and many others. And that's just kind of one example of many to come. I think that people will do anything they possibly can to find that cheap, clean, renewable power so that they can then use it to mine Bitcoin.
Yeah, I think that's so interesting. And it's amazing to see how many haters there are who don't really understand how the technology works, how mining works. So it's so important to have people like you, and also people who think that Bitcoin's just for nefarious activities and illegal activities. And I know that you've said on many occasions how that's simply not true, that actually it's probably the most secure, transparent network, right?
Yeah, well, you got to remember that most of the critics they haven't done their homework, right? They basically are showing up, and it would be like me showing up to a surgery center and telling a doctor, "Oh, you know what? I think you're making a mistake." And the doctor's like, "Listen, kid, right? Like I've been doing this a really long time. I'm literally an expert at it. I spend all day long thinking about it, practicing it, and doing it. What do you know?" Right. And I think that's the same thing here is imagine being somebody who doesn't spend all day on this and showing up and telling Bitcoiners, facts that you believe to be true, but have no evidence or can't actually kind of defend. And I think that's where you see a lot of Bitcoiners just say, listen, you are wrong. Right. And that is something that is usually not said kind of in the traditional financial system. Everyone is trying to play this game of credentials and playing this game of kind of social, niceness, if you will. Right. Everyone wants to be everyone's friend. Everyone wants to kind of constantly be, agreeing, and that there's this political correctness to it. Well, what ends up happening here is people just say, no, we're after the truth. Right. The emotions, the feelings, the relationships, all that other stuff is second to the truth. And the truth is that there's a lot of data that's presented. There's a lot of facts that are presented, and the critics are uninformed. And so what you end up getting is you get these uninformed critics who frankly just embarrass themselves. And the good ones, right, the people who I think that are intellectually honest say, hey, you know what? I didn't know that. Let me actually reevaluate my position. Or, can you tell me more? Where can I go read about it or learn about it? That's a very stark difference in opinion or response than somebody who just digs their heels in, draws a line in the sand and just doubles and triples down on what appears to be a bad opinion. And so, ultimately the market decides my opinion, your opinion, or nobody else's opinion really matters. The market's going to decide who the victor is in this whole debate.
Just in terms of where we're at right now, we hear the Yellens, the Powells, that there is no inflation. It's not a problem. Clearly, with all this money printing, something has to happen. There are some strategists who are predicting a massive market crash that rivals 1929. What do you think is going to happen? And, the last time the market crashed with the pandemic starting, Bitcoin crashed along with it. So can you talk about, obviously none of us have a crystal ball, but where do you see things going with the amount of money printed, and how does Bitcoin come into play?
I think it's great for financial assets because they're going to continue to pump liquidity in the market. I joke that the government has basically outlawed bear markets or market corrections. Every time the market starts to correct, they basically just pump more liquidity into the market. And so when you have that occurring, what you're going to find is they're going to keep asset prices inflated. And so again, holding cash is going to be bad. Holding investable assets will be good. And I think that when you have a volatile asset like Bitcoin that's being repriced by the market after a supply shock, you essentially see that Bitcoin's going to be the best performer, right? If you look over the last couple of years, over the last 12 months, I think Bitcoin's up 500%, gold's up like 15%, S&P's up like 15-20%. So it's just such dominant outperformance across other asset classes that, again, you don't have to put all your money into it, but I think that having zero exposure is probably the wrong answer. And so whether it's 1%, 5%, whatever, I think people just got to do their research, understand the risks they're taking, and then go ahead and get exposure.
Price prediction for the end of this year?
The only number I've said publicly, I've said it since 2019, is 100K by the end of the year. Somehow that was a crazy thing in 2019. Today, that's like the most conservative number anyone throws out there. We'll see what happens, but I feel good about 100K.
Thanks so much for listening to this episode of Coin Stories. I'd love to connect with you if you have questions or guest requests, so feel free to get in touch on Twitter @NatBrunell or Instagram @Natalie Brunell. Take care till next time.